All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com, and there you can download my free ebook that will teach you the basics of options trading. All right, so today is April 20th. It's Thursday. It's approximately 1:53 p.m. Eastern Standard Time. And of course, I'm in a trade, guys. So just want to let you guys see what I'm into today. I've actually, because volatility has been so suppressed over the last few days, I've actually been doing 1 and also 2 DTE days to expiration trades, because again, volatility has been so suppressed lately, and in order to do the 0 DTE trades, it really requires you getting really close to the price of the underlying. And the underlying that we're talking about in this case, of course, is SPX. So it really requires you to get close to the underlying, because IV is just so low. And to me, that's just taking too much risk, right? So I'm one of those folks who are obsessed with risk and managing my risk correctly. That's the reason why I've been able to have longevity, right, in this space, because I'm more concerned about risk than I am about reward, right? So risk first, reward second. And so when you take care of your risk, the reward will work itself out. So yeah, so I've been doing 1 DTE and also 2 DTE trades. Just to give you an example, so yesterday when the Fed's beige book came out, right? So the Fed's beige book came out around 2 o'clock yesterday, and the market spiked a bit, right? So it spiked, it got up as high as 41.62, as you can see here on the Thinkorswim chart. And so right at that point, that's when I decided to put on this vertical call credit spread when I sold the 42.25, and I bought the 42.35, right? And so I put that on yesterday, right as the market had spiked, because I had a strong suspicion that the market would actually come back down. All right, considering the way the market has been trading over the last, really all this week, it's been trading in a very tight range, right? So I figured that it would eventually come back down, and it did. It actually, this morning, it actually opened down, it gapped down, and as you can see here, it's working its way back up. And so this morning, I actually put on a 1 DTE trade, which expires tomorrow, right? Right as the market hit roughly close to 41.22, I put it on. What time did I put it on? Give me a second here, guys. Looking at my spreadsheet here. I didn't record the time. Okay, I actually got a new spreadsheet, so I didn't record the time. Yes, I'm not recording the time anymore on my new spreadsheet. But nevertheless, it was roughly around. It was the beginning of when the market opened, roughly between 9:30 and 9:45, and so just trying to anticipate the pivot, the inflection point, right? So the point at which the price of the underlying would actually go back up in value. And so I put on a vertical put credit spread at 40.55 and 40.45, right? So I sold the 40.55 and I bought the 40.45. And again, both are, for 6 contracts apiece. Both are $10 wide, right? And so right now we can look at the position itself. So I took in $422 for the position, right? And again, this aligns with me always looking to get at least between $300 to $500 per day. But sometimes, when you're doing 1 and 2 DTEs, you have to spread those. Your income goes out over a few days, So I don't care about that. As long as I'm walking away with a profit, that's all I'm concerned about. And so right now I've made 80% of the 420. So the equity curve is constantly going up and to the right, which is what a successful options trader should actually be looking for the equity curve to go up and to the right. So again, stress-free trade. I could probably take this off now, but just gonna let it expire worthless tomorrow. Yeah, it's unless something really unusual happens in the news, this position should definitely expire. I should be able to walk away with the $420. And today I'm probably going to wait until around 3 o'clock, 3:30 to put on another vertical call credit spread and take an additional credit. So we'll see how, we'll see where the market is around between 3 o'clock and 3:30 today. So I'm just curious of, how are you guys managing with this low volatility environment? Give me some ideas what you guys are doing, down in the comments below.